What up, guys? It's Selka, and I've been silent in the last weeks. And the reason why is that I'm rebranding my channel. So, last time I did this was last year when I started editing my videos, and they were more and more enjoyable to watch. But this time it will be even better. So, I will start making tutorials, shorts on YouTube, and anything that will help beginners to understand more about technical analysis and the wave theory, which is the method I use. All right. So there's many people that still requested an update on Bitcoin and Ethereum, and I know these people love my analysis. They love how I'm able to forecast the market sometimes. Well, I'm pretty accurate. Not gonna lie, if you watch my old videos, you'll see that most of the time I get the right direction, and thanks to that wave theory and to the technical analysis, and that's the reason I'm trying to push this channel and make it as successful as possible, trying to learn about TA and make people understand about the method and TA in general, because it's a bless to have a chart in front of our eyes when it comes to trading. That's that's the best edge you could have. All right, so right now I'm gonna dive into it on Bitcoin, and it will be pretty short, so short and sweet, like you guys like it. No intro, no outro. I'll make it really short. So right now, Bitcoin, what I'm expecting, I'll just cover the smaller time frame. I think it's the most important part. And regardless of the news that we have right now around the world, the war and everything, you got to keep in mind that this chart is the chart. This is the only data that you have. The rest is purely talking, speaking, speculation. Right now, we have charts, we have data, and we're going to focus on what we have. All right. So right now, I'm pretty careful, all right, because I see this as an A move, all right there as an impulse. This could be a correction, so a B wave, and this could be a C wave. So always when I see something like this, all right, when I see an up move, retracement, another up move, I always check if there is an impulse behind it. So in that case, there is an impulse right there, all right, and even before that impulse, you still have some move that looks like this. That's to me a range, and that you have an impulse behind it too. All right, so you have an impulse, some sort of a range, then another impulse, and again some sort of a range. So an ABC, it's not really similar to this one. All right, this pattern not really similar to this one, but it's still to me a correction. So when you know corrections, you can see that this as a correction and this as a potential correction. All right, so just like we were careful right there and we were seeing sells, I highly advise you to go back to my channel and see that right there I was expecting a drop to break that low, and it's exactly what happened. So right there, same thing, I'm expecting a drop to retest the low. All right, that's what I'm expecting when it comes to this pattern. But like I said in the last videos, I said that even though all right, I'll just put the arrow, even though the direction is this drop, even though the direction is again this drop, for this one, this was the pattern, this little wedge right there, this one is right there. So even though this pattern, what I put under that those lines are a correction, a regular flat apparently, and the target is to break that low, even though it is, and even though in the past it happened, there is a pattern, there's a certain pattern that can increase the probability of not getting this pattern. All right, so let me just break this down. So if you see it range on top right there, giving a range, that means that this move is a correction, and that means that this will lead to another impulse up, regardless of what's happening under it. All right, so as long as you don't have this, you gotta keep in mind that this will go down. So the way I'm seeing it when it's looking like this is that no matter what, I'm shorting this, and when I see a range, I'm getting out of the trade. That could be a way of thinking about it. All right, so you short it when you see an ABC like this after a drop, you short it right there, and if it start ranging, you get out. But if it don't, you'll probably get the other impulse down. which is what happened most of the time. So if you want to play it like this, you short it. So around there you start shorting, and if it start ranging, you get out. Now the thing is, right now it can't, like right now when I see this, I do think that it start looking like a range. So if I was on the sell, which is the case, I'm thinking about taking profits in that low, and probably even getting out of the trade. All right, at least taking profit, because this looks like a range. And more importantly, it's not only a range, it's a regular flat. All right, this is a well-known correction. All right, so if I remove this, even though that this pattern right there, even though that this aim for a drop, all right, the fact that a range right there leads to a pump, leads to an up move. So this correction leads to an up move, but this bigger one leads to a drop. So what do we do? All right, at this point, what we do is that the smaller time frame will often win. All right, the smaller time frame often win those scenario, those contradiction when you have them. So this will probably lead to a bump, and then we'll get the drop. So that's what I'm expecting. All right, but just in case we don't get this and we get the drop straight up, all right, it can happen too. I'm in the short right there, and I'll be out or taking profits when we break that low. Because if I zoom in, what's happening if I zoom in is that I have a drop, I have an up move, and I have a drop that should come and retest the low. So this drop should come and retest the low in every case, because this is an ABC correction, this is a regular flat, and this should come and retest the low. So I took a trade right there, I took a short on that setup, and I'm expecting a breakout of that low, right? So in the best case scenario, this is not a C wave, and this drop to break that low, and it completes this correction that I saw, all right? That's in the best case. In the worst case, we get to see this move drops, break the A move, and then go back up to break the top, and it completes this correction before having another sell. So if that happened, it's fine. I'm taking profit right there. I'm getting out of the trade, and I'll be trying to short again when we break that top. So I won't be in the trade if it doesn't, like, I won't be in the trade. I will probably not take this up move. Maybe I'll take it, but I'll consider it. But I'll most likely look for sells when we go back up. All right. So I'm still in the sell. I'm not getting out of the trade as long as I don't hit target. But right there, that's where I'll start taking a decision, taking some profit, putting break even, and even maybe taking a long position if there is a proper setup. If there is not, then this could give another range and start dropping slowly. And I don't want to miss that if I was in the trade earlier on. So that's exactly how I'm thinking about Bitcoin. So if I want to make it easier for people that really don't understand about the wave theory, it's either going back up and then drop, or dropping. All right, there's a scenario that I won't talk about it, but it could happen, so I just don't want to talk about it because it's too early to say. But it could be a complex structure where we see something like this. All right, an up move, a drop, another up move, and complete a correction right there. But I don't want to dive into it, so we'll keep it simple: up move, drop, or drop. So if you're in the sell, that's good. And what I can advise you is to be wise with your decision. All right, be wise with the fact that you know that this could either drop or go back up and drop. So don't get in the short right there thinking that this will only drop. It can go back up and drop. So be wise. Either you take a sell right there or in the tops, and you be careful of that potential up move, or you wait, you get a sell right there, and you can be more soft with yourself. So that's the whole purpose of risk management, money management, is that you need to take care of the trade, even though you know that these are the scenarios. All right, you know that these are most likely going to happen, but you need to still take care of your trade, because if you know that these are the scenarios, I bet some of you can take the trade and still lose money. All right, I do sometimes. I sometimes have a scenario in mind. It goes exactly as planned, but since I didn't manage my trade correctly, I still ended up being on break even or losing money. All right, and that's the whole purpose of being wise with your trades and being careful. All right, just not being greedy, not being fearful, just careful. All right, Ethereum, this one is different. I think this one already went for the scenario where you have this as a correction and it drops to break the low. So regarding Ethereum, it's like you went for this piece. All right, there's no up move. This one went like this and broke that low. So for Ethereum, it will break that low surely, and this will probably be another up move right there just to complete the setup in the smaller time frame before breaking it. So let me zoom in and I can dive it. I can dive into it. So right there, as you can see, ABC. So you have, this one is really clean when you think about it. You have this drop, ABC, another drop, again ABC, and then we're getting another drop. And if you want to take this trade, if you wanted to take this trade, you can look for setup right there, right there. This was a cool setup, running flat right there, but there was no setup that will look super clean. All right, these were like average. All right, right there you have another opportunity, but I would not take it. But this will probably go up, break the top, and then go back down for this ABC. All right, I would not take it because the target is really close, and you have no point of putting a stop loss like at a strategic point, and this can like range a little bit more before going down. All right, so that's not good. All right, I would not take this trade, but I can tell you that this will most likely go back up and drop, but I would not take it. All right, even though I know that, I would not take it. Like the target is right there and you're taking the trade right there, and usually your stop loss is above your impulse, so it could be right there, so that's a negative trade. I'm not taking that. All right, I'm just knowing that this will most likely drop. All right, so being careful on that. And if you want to take it on smaller time frame and scalp it, that's different. That's taking it right there, taking profits right there, and putting a stop loss around there. It's not worth for me either. All right, but I see people doing it, and you can. All right, but I would not do it. So that's it for Ethereum, that's it for Bitcoin, and that's it for this video, guys. It was pretty short and sweet. Nothing will be edited, no intro, no outro. Simply straight up chart analysis. And really, I strongly advise you to stay tuned in this channel. This will be epic. I plan on doing massive videos for you all, and I swear you guys will enjoy it. So feel free to share this channel with your friends. I'm trying to reach 400, maybe 500 subscribers. That will be awesome, and that will strongly motivate me on doing the best I can for this channel, and I swear you won't regret it. So see you guys in the next one. Peace.